special show to make you a better speculator. If you want to speculate like you mean it, speculate like a pro, you can't be making the mistakes of an amateur. And because I've made every mistake, you don't have to spend a long and painful time learning what you shouldn't do. I've done it all wrong at one time or another. So, without further ado, like those books that you see on the bestseller list all the time, here are the 10 habits of ineffective people. The 10 bad habits of bad speculators. Number 1, ineffective speculators will sell a stock because it starts going down. You should never sell a stock because it starts to go down. A lot of people will just want to cut their losses when a speculative play starts to turn against them. Hey, you know what I think about panic? You don't panic in this game. You come home with your shield or on it. Most of the people speculating in the under $10 space, how do I put this? I want to be delicate about it. I want to be ambassadorial. They're morons! They can't explain why they sell. They can't explain why they buy. So if the fundamentals stay the same and the stock starts to decline, go with your conviction and buy some more. Number 2 of the ineffective habits of bad speculators, kind of a corollary to the first one. Don't hold on to a position that keeps going down. If there's no upside in sight, then guess what? Your conviction was wrong. In other words, just because it starts going down, don't panic. But if it stays down, get out and make your money somewhere else. Some stocks only work in up markets. Market's bad, you must get out as soon as possible. Let me show you some pictures. Here's the chart from Applied Micro Circuits, AMCC, for those home gamers still around. Oh, here's Lucent. Yeah, I used to call it Lucent because it didn't deserve to be called Lucent from 2000. Remember, when a stock's good, I let it be called by the name that they want it. But when a stock goes bad, like Avon, that's Avon. It's how I call it once they start losing money, not how they call it. See, you can't hang on to the Lucent forever. If the stock keeps declining and the market isn't hot, you get your butt out of there. Don't ride a stock down from 100 to 2. People do it all the time. Number 3, bad speculators will sell way too soon. You should have some idea of what your exit point is before you establish position in any speculative stock. These stocks can move up for 2 or 3 days entirely. Again, because remember one of my rules. The float is small. Don't mistake that for the entire run. Don't rush to cash in your entire position. Don't do this after 5 or 10% increase over the course of a couple days. Look, don't be this either. I know. Scylla and Charybdis. Remember those 2 clowns? It's okay to take some off the table. But don't assume little moves are the big ones that you're waiting for. With these companies, not everybody who wants in will know about them after a couple strong days. Give it a little more time before you rush to take profits on everything. Number 4, really idiotic speculators will try to play sector trends by buying the cheap, worst of breed stocks. If HCA is going up, you know what they do? They buy Tenet Health because it's cheaper. And then they get stuck. And kids, if you're watching, don't ever buy Tenet Health. Let me explain this a little better. You're not really speculating on anything if you buy the worst stock in a good sector because it's cheap. You're not being a speculator. They got another term for it. You're being an idiot. Best of breed stocks will capture the movement in a sector. Worst of breed stocks will always get passed over. If best of breed company isn't speculative and it's going up for the same reasons that you hope the under $10 worst of breed stock will go up, then you're not speculating. You're playing a sector trend. These are 2 different things. Don't get confused. Don't buy cheap stocks and call it speculation unless you've got a better reason. Remember, I'm trying to up the game of the term speculation. The 5th bad habit of amateur speculators, they always fall for the hype. You want to be a pro. Don't believe the hype. A lot of companies that trade under $10 hire cheap PR firms to promote their stocks. We used to say that there was a release, literally, a release ratio. Some companies were able to produce so many releases that it's like, oh my God, it's the 4th one of the day. I'm not going to call them dishonest because then the lawyers would eat me alive. But they do put the best spin on things they can. Almost all of these companies will play the spin game. That's fine, as long as they don't take you for a ride. You can even game this out. Check out the promoters and see how other companies they've worked for have performed. This isn't an outstanding indicator, but it's worth looking up to check the veracity of what these companies tell you. Those are 5 bad habits of ineffective speculators, and I've got more, but let's go to Tushar in California.
Hey, Jim, love the show.
Thank
Booyah.
you. Booyah.
When speculating on companies prior to them announcing the quarter, is thinking about human psychology more important than anything? Because I asked this last week. I was choosing between CAT and eBay, and I went with the stock pick of the week, CAT, and eBay ended up popping up, and both had monster quarters.
Okay, look, this is one. It's very interesting because we want to default and think, Tushar, that it is psychology. No, it's the run-up. When I am picking a stock, let's go in the Wayback Machine, go into my old office when I was a hedge fund manager. Guys would come into me and say, listen, I hear that, let's say, Symbol Technology is going to have a good quarter. Well, if it's Symbol Technology, I take that with a grain of salt. But if the stock is down a lot in anticipation of the quarter, I like the risk reward. Even with a stock like Symbol. Why did I pick Symbol? Because it's the worst stock I've picked this year. If Symbol is at 10 before they report a quarter, I like the risk reward there. The risk is probably a point downside. The upside could be 4. I think you got to look at where stocks have come from when you play that game. I tend not to play the where stocks are from. But for this, look at your example. eBay was down from 100 to 30s. Very little risk there. Caterpillar, which I still like, went from 50 to 54 in anticipation of the quarter. The bottom line, that's always going to bring in profit taking. You don't have a lot of profit takers in an eBay. Let's recap. Never sell a stock if it just starts to go down. Don't hold if it keeps going down. Don't sell too soon. Don't buy the cheapies. And please, don't believe the hype. Stay with Cramer.